Thanks everyone for joining our webinar on unlocking your borrowing power and what banks don't tell you about getting a loan. I'm really excited to present this bit of content. We're going to keep it short and sharp, over 20 minutes, and we're just going to have a look at how the banks actually work out your borrowing power, and then how that differs between different banks and what sort of impact that has when you go to apply for a loan. So get started and start with some slides. So, yeah, as I said, what we're going to be talking today is about unlocking your borrowing power. So, what the bank is going to tell you. If you do have any comments or questions, just if you can use the Q&A function rather than the chat, that would be great. But hopefully everyone can see my screen there. Just let me know if you can't at any time using the Q&A function. So, borrowing power, why it's the key to your property goals. And when you are looking to buy property, and certainly whether that's one property or multiple properties, understanding how the banks assess your income can be the difference between whether you're able to move forward with a purchase or whether you're being held back, and how your application gets presented to the bank, and probably more importantly, which bank it gets presented to is crucial as to whether you're going to be able to obtain the funds required to make your next purchase. So what are the things that the banks look at for saying yes to your application? Obviously, we'll be based on your financial situation. Now, when we talk about your financial situation, within the lending world, they operate by the 3 C's. And the first one is collateral. So the banks want to understand what sort of security, when they say collateral, they're talking about the property itself. What sort of security is going to be behind lending? So is that security acceptable? Because that's what the bank is hanging their hat on in lending that amount of money for you out the door. So the first criteria you have to meet is, what is the collateral and what sort of deposit are you putting down? That will be the first hurdle to meet. And the second one, which is where a lot of variance comes in, is your borrowing power, which is what we're going to be specifically talking about today. And that's where, based on the amount of income coming into your household and the amount of expenses going out, is there enough money left over to make the repayments each week for the loan that you're applying for? Now, where the great variance comes is that the amount of income that the banks look at and will allow for your application can vary enormously depending on the type of job you've got, as you'll see in some of the examples we're going to go through, the type of income, role, how it's received, and also your expenses can play a part in that as well. So you'll see why we get some really big variances in how much you can borrow between bank to bank. These are the 5 hidden factors that could be costing your borrowing power. Now, there's more than 5, but these are 5 that we have seen come up recently quite often. So they are, first one is the limits on your credit card. One of the greatest myths out there is that if I pay off my credit card every month, then that won't get counted as an expense because I'm paying it off in full. Well, actually, that's not correct. Whatever your credit card limit is, it's what the banks will use to assess in your application. So if you've got a $20,000 credit card limit, that will have a really big impact on how much you can borrow, as opposed to someone who has a $5,000 limit. Even if the person with a $5,000 limit is spending regularly on their credit card, the person with the $20,000 limit is not spending at all. The second one is private school fees. This has become more crucial of late. So some banks will actually let you exclude private school fees if they can see that you've got savings to cover it in the future, whereas other banks, it's mandatory and it must be included. That can have a really big impact on your borrowing power. Thirdly, for business owners, those paying themselves a salary, that can make a huge variance for them and their borrowing power. Fourthly, business in a growth phase, how bank, what sort of documents the bank asks for from people with businesses to determine their borrowing power is really crucial because it does vary a lot. And also, is number 5 is assessment rate. So when we talk about assessment rates, what we're talking about there is when you borrow money, the banks will lend you at a specific interest rate. That's the interest rate you pay. Do you make your repayments based on? But the assessment rate, what that is that's the interest rate the banks use to calculate how much you can afford as a loan. So even though the interest rates might be around 5.5% to 6% at the moment, most banks are working on an assessment rate of closer to 8.5%. They're stress testing your loan essentially to see, okay, can you afford this loan if interest rates go up by 3%? But that can vary from bank to bank, and that's something that we're going to have to look at. So the first one, as I said, credit card limits is what banks look for, not credit card balances. So a client with a $20,000 unused credit card limit may cancel that card, and that would increase their borrowing power by about 160,000 just by cancelling a $20,000 credit card limit facility. So huge impact. That's probably one of the easiest and quickest wins you can get with your application. Secondly, private school fees. So this was a couple, well, sorry, not these actual people, but we had a couple approaches recently. They had all their banking with Commonwealth Bank, pretty happy with Commonwealth Bank, and happy to move forward with another application with them. What they had is that they had an investment property and they wanted to build a modular home to increase the income on that. So they said, hey, we need about 750,000 as a loan. Can we look at that potentially with CBA? We've been happy with them. Or can they borrow us? So we put in all their income details, and they had 2 kids. They've got 2 kids at private school, and that's costing about $2,500 a month. And what it worked out is that we needed to include that with Commonwealth Bank, and their borrowing power was 606,000. Okay. Macquarie, on the other hand, said, we're happy for you to leave that out. And the reason they were is this couple actually had 300,000 in savings, which was enough to allocate and cover the school fees for the remaining education time for their children. So their borrowing power with Macquarie, 795,000. So it got them the 750 that they needed. If we had been stuck just looking at Commonwealth Bank, we would have been about $150,000 short where we needed to be. But because we're able to take advantage of some flexible lending policy that Macquarie has, to get to the 750 figure we needed. So business owners paying themselves a salary. So becoming a lot more common now that business owners will actually pay themselves a salary and put themselves on as a PAYG employee of their own company. Now that can be really helpful because a number of banks have a policy where they will just accept the pay slip. They don't need to assess the income on their tax returns. So they'll just work off the pay slip, which what it does allows the business owner to have their application assessed on their income as it is today, rather than their tax return, which could have been completed 12 months ago. So really great example of this was we had a lady who has a business that's only about 18 months old. And we had a look at her borrowing power with Westpac. Because Westpac were looking at the 2024 tax returns, her borrowing power was 900,000. Then we had a look at ANZ. They said that they were happy to look at the pay slips that she was providing. So they could use the income as of today, which was significantly higher, about 85,000 as opposed to 7,000 from last year. So her borrowing power was up 1.35 million. So again, if we had just approached Westpac or a lender who didn't have that policy, that offering of allowing the self-employed person to use pay slips, we would have been stuck at around 900,000. Fourth is business owners in a growth phase. And another one we're doing a lot of is we had a gentleman come and approach us. He had 2 investment properties. All his banking was with Bankwest, his mortgages, and he wanted to purchase another investment property with, and was quite happy to look at Bankwest as well. But when we looked at his tax returns, And keep in mind, this business was really going through a strong growth phase. We had to look at the 2024 figures, and his borrowing power with Bankwest, was under 500,000, not enough for him to get the investment property he wanted. We then had a look at a non-bank lender called RedZ. Now, what they did is they said, rather than looking at your tax returns from a year ago, provide us with your last two BAS statements, business activity statements. And what we'll do is we will look at the sales figure and take a percentage of that and use that as your income. And that made a huge difference. Many could borrow 1.2 million versus the 500,000 mark with Bankwest. In that case, the interest rate is about 0.6 to 0.75% higher. So there is a higher interest to pay, but he was more than happy to accommodate that higher rate in that it was able to get him in the door for what he needed to do. And then finally, as I mentioned earlier, assessment rates. Recently, an existing client approached us about accessing some equity to purchase a car. Wanted around the $60,000 to $70,000 mark, and he also had all his mortgages with Commonwealth Bank. He was quite happy to stay with them, but their borrowing power for him was capped out at 30,000. We looked at another lender called Athena, and we could get him a loan of 70,000. The reason being is that Athena was using a lower assessment rate than Commonwealth Bank. They were using an assessment rate of 7.94%. So they were working out repayments. They wanted him to show affordability on repayments at 7.94, whereas Commonwealth Bank was working out its affordability based on an interest rate of 8.99. Both these lenders were offering him interest rates under 6%, but it was the assessment rate that meant that there was such a big difference in borrowing power. So I just wanted to share those 5 examples with you on why it's so crucial to get various options and have someone who's looking at your application really understand your situation and align that with which banks can maximize your borrowing power, so that you have all the options you do to for the properties that you're looking at. So now, obviously, getting, as I said, a really vast opinion of lenders can allow you to borrow more. We do want to stress that we really encourage you to be prudent and do your due diligence as to what you can afford as a loan, and making sure that you're doing your own stress testing on repayments. The last thing we want is people to be overextending themselves on loans. But we do understand that a lot of the time lenders take a very conservative view and maybe looking at figures that may be 12 months old, particularly for business owners or for people on salaries, may not be taking all the overtime income, and therefore what the loan amount that they're prepared to offer you is in reality much lower than what you can actually afford. So it's just finding the lender that is the right fit for you with regards to the loan amount that you require. If you'd like to know specifically what your borrowing power is and what your finance options are, you can just jump on our website, mynewbridge.com.au. Top right of screen, you can book an appointment with myself or any one of our other brokers. You can either meet online or in person, or you to call us directly. But either of those 2 methods will allow you to jump on a quick discovery meeting, usually lasts for about 20 minutes, but will give you a really good idea of what your borrowing power is, what your repayments are. We can also go through other things like the deposit you'll need as well. So, well, that brings us to the end of our webinar. Just want to thank you everyone for coming along. I did want to keep it short and sharp. And what we'll do is we'll send you out a recording of this as well. So if there is anything you want to go over, then you'll have the information to do that. But before I jump off, if you do want to ask any questions, feel free to the Q&A chat, the Q&A box now. I said the chat function is disabled, but the Q&A function works. So feel free to type in any questions. But if not, I will get a copy of this through to you. Forward to helping you with any applications you require. Thank you.